Hello, public sector in modern India. Public sector in modern India. So, public sector is British Indian administration. The presence of factories and enterprises was the conspicuous, and they were mostly built and used for the vested interest of the colonization. So, public sector enterprises in the country was that time was in the nascent stage, and railway, post, telegraph, port trust, ordnance factories, all India radio, few enterprises like government, salt factory, quinine factory, which were departmentally managed. The leader of the independent India drew like why they wanted to establish this public sector, because first to increase the industrial infrastructure, second to create the physical infrastructure, third to generate the employment, fourth to generate the economic surplus, fifth to generate the regional disparity that should be removed, to achieve the self-sufficiency, self-reliance, and to use the scarce resources of the country very effectively. Therefore, former Prime Minister Pandit Jawaharlal Nehru had described public sector enterprises as a temple of modern India. So, Industrial Policy Resolution of 1948 envisages that development of core sector through public enterprises. So, there was an industrial policy in 1956 gave the primary role to directly responsible for the industrial development. Then 1973, 77, 80, 91, 91 was the term as watershed year heralded liberalization of Indian economy. Now, manufacturing, there was turnover and net profit, mining, turnover, net profit, and electricity. Three sectors were performance of industrial CPSC 2011 and 12. So, manufacturing was 27%, then mining was 17%, and electricity was the 16%. So, this was the ratio at that time. Okay. Now, PSU with the investment of 290 million only, and the number of PSU has grown by leap and bound and have contributed to growth story of the India also. So, there was like 225 were operational, 35 was in construction, and now 2011 and 12, 29% was emphasis on the manufacturing sector, and 27% to the mining sector, and 13% in the electricity sector. So, what is the form of public sector undertaking? See, there is the GAIL, we can say GAIL is there, Machine Tool, HMT, Hindustan Machine and Tool is there, State Trading Corporation is there. But three are important out of them. One is the department undertaking, second is the statutory, and third is the government company. So, the department undertakings, we can take the example Post and Telegraph, Railway, All India Radio, Doordarshan, and Ordnance Factory. And statutory corporation are Food Corporation of India and LIC, FCI, LIC Unit Trust of India, Life Insurance. Okay, and government companies are Hindustan Machine and Tool, Steel Authority India, and Hindustan Shipyard Limited. These are the department undertaking are the Post and Telegraph, Railway, All India Radio, Doordarshan, and Ordnance. So, department related undertaking. Department related undertakings are the form of organization is primarily used for the provision of essential service such as railway, postal service, broadcasting, and such organization function under the overall control of Ministry of Government. So, Ministry of the Government and Finance, and control the same way as any other government department. This form is considered suitable for the activity where government desire to have control. Okay, so this is the department undertaking. Why department undertakings are important? Because the enterprise is established by the government and it overall control rests with the ministry. So, ministry will control the department undertaking. Second, enterprises is a part of government and is managed like the government department. Okay, it managed like the government department, and the enterprises is financed through the government fund. So, government fund will be there, control will be there, and budgeting, auditing, controlling, everything will be by government. It is policy is laid down by the government and accountable to the legislature. So, legislature will be there. Okay, and the enterprise is generally organized as a measure of subdivision of one of the central government department and is subject to direct control over the need department, and wherever this applies in the legal system of the country, the enterprises possess the sovereignty immunity of state and cannot be sued without the consent of the state. Okay, so certain advantage for the department undertaking is what it fulfill the socio-economic objective. So department organizations are what department organization fulfill the socio-economic socio-economic objective, and departmental undertaking are responsible to the legislature, so questions can be asked there, and it satisfies the public with his replies. And the department undertaking help the government to exercise control over specific economic activities and making social economic policy. Department undertaking contribute to government's revenue also. Misuse of the fund will never be there, and budgetary control will be very like tightly, so no misuse of the fund. So department undertaking suffer from certain limitations also. So what are the limitations now? See the limitations. So limitations, for instance, government permission is required for the every expenditure. So government permissions is required. Second is the undertaking suffering from excessive parliamentary control. Parliamentary control, fund constraints are there. Okay, like a professional expertise. So expertise are not there, and administrative officer of who manage the affairs of department undertaking do not generally so have business experiences as well as expertise. So flexibility is very necessary, autonomy is very necessary, inefficiency is there. Okay, now second one is the statutory corporation. Okay, so statutory corporation. Statutory corporation refer to the corporates body created by the parliament. So it's created by the parliament and state legislature by a special act. So there will be a special act by which it creates, which defines its power, function, pattern of the management. And statutory corporation is also known as the public corporation. Its management pattern, its power with function, the areas of activities, rules and regulation for its employee, and its relationship with government department. So are specified in the concern. Its capital is wholly provided by the government, and such organization are Life Insurance Corporation of India. So Life Insurance Corporation of India, State Trading Corporation, Indian Finance Corporation. It may be noted that more than one corporation can also be established under the same act. So statutory corporation is incorporated under a special act of parliament, and statutory corporation is an autonomous body and is free from the government control is aspect of its internal management. Statutory corporation has a separate legal existence. Its capital is wholly provided by the government, and its autonomous body and free from government control. And statutory corporation is managed by board of director. So board of director will be there, and individual who are trained and experience in the business management or board of director. Statutory corporation is supposed to be self-sufficient in financial matter, and employee of these enterprises are recruited as per their own requirement by following the terms and condition of recruitment. Okay, so statutory corporation as an form of organization for public enterprises, certain advantage are there. It's like managers are experts. They are advantage because of there is both advantage like departmental and private undertakings. So it's enjoy the internal autonomy. Government has no direct interference by the day-to-day functioning of the statutory corporation, and it's watched by the press and public, and such as maintain a high level of efficiency, accountability, flexibility, and it's independent in matters of management and finance. It enjoy the adequate flexibility and good performance and operational results also. So the government is authorized to give policy direction to the statutory corporation under provision of the act also. Okay, it's fund also. So this is the now nevertheless the statutory corporation has certain limitations also, like what are the limitations? Because it's formed by the parliamentary act, so there are also some activities and rights can be made only by the parliament, and several impediments in business also, and respond to the changing conditions and take bold decisions also. So ignorance of the commercial principle in managing the affairs. Now next was the government company. So government company was like 50% shares was in the government and rest in the private sector. So its Company Act 1956 is followed all those rules and regulation as per the applicable to the other registration company. The government of India, the organizer registered as number of its undertaking as government company. Okay, so there is the most business units and managed by the government fall in the category. Government company is registered under the Company Act 1956. Government company has a separate legal entity, so it is a legal entity also, and it is sued and can acquire property in its own name. The annual reports government company are required to be presented in parliament. The capital is wholly or partially provided by the government, and it is managed by the board of directors. All the directors or majority of directors are appointed by the government depending upon the extent of private participation. Its accounting and audit practice are more like those of private enterprises, and its employees are not civil servant. It regulates its personal policy according to article of association. Okay, so the government companies are from organizing a public sector enterprises a certain advantage. What is the advantage? See, now it is more efficient. It's run on the business principle. It is fully independent in financial and administrative matter. Its board of director usually consists of some professional and independent person also, and they are very good in availability and service and responsible price without compromising quality. And it enables the government to diversify its ownership in the company by selling, buying equity, and it is easily transfer the company to private sectors and is simply reducing the share of capital by 50%. And government company has certain limitations like lack of initiative, lack of management, lack of government company always fear from the public accountability, and lack of initiative by the right decision right time, and lack of business experience, and companies generally put into the hand of administrative service officers. Okay, lack of experience in the management and business, and they are not that much efficient, and frequent change in the policy and management, and companies generally keep on changing with the change of government also. So rules and policies leads to a unhealthy situation. So these are the problem. Now next question is the problem of accountability, control and autonomy. Okay, so what are the policies related to that? In 1990, the country then entered into liberalization, and therefore the public enterprises which used to work in protected environment had to change. Since the issue of accountability and autonomy has been controversial, autonomy and control are the two sides same coin. The ultimate objective of both control and autonomy is the same, like improving the performance and improving the goals. Should be an ideal compromise between the autonomy and public enterprises. So in other words, autonomy and control should go hand in hand. If we accept that both control and autonomy are imperative for the enhancement of the performance of the public enterprises, then another arises: how much autonomy and how much control. It's very difficult to know determine, like it can destroy the commercial nature of the enterprises. So wherever too much autonomy takes PSU outside the democratic regime, and it strike a balance between the requirement of relevant autonomy and effective control. So Arjun Sen Gupta Committee. Arjun Sen Gupta Committee is the concept of memorandum of understanding to improve the performance of the PSU. Department of Public Sector Enterprises, Government of India introduced the concept of MOU. In fact, MOU is the aim to providing greater autonomy and control to the government. And policy, industrial policy 1991 made for PSU to enter into MOU and respective administrative ministry. So MIU system introduced by performance evaluation of public enterprises. And however, performance of MIU signing central public sector enterprises confirmed with a number of limitations and problems. So significant improvement from the fact that it reflects the enterprises overall composite rating, and secondly the performance of chief executive of enterprises is partially seen in MIU. So it was like enterprises without freedom to function and operate commercially also. Therefore the government of India also started giving greater autonomy to public sector undertaking. So they titled the Navratna. This policy has allowed the PSUs to compete with a global company like Maharatna. Okay, so now what is the what government did? See, first of all, Maharatna is like having Navratna status before listed in the Indian Stock Exchange. An average annual turnover should be 20,000. It changed now 50,000 crore. And an average annual net worth will be 10,000 crore. Now it's 20,000 crore. last 3 year. Okay, a net profit should be 5,000 crore and should have significant global presence also. So many companies are there, like we can give example Coal India, Indian Oil Corporation, NTPC, and Bharat Heavy Electronic Limited, Oil and Natural Gas Corporation. Navratna was the title given originally to 9 public sector enterprises identified by the Government of India, having comparative advantage which allow them greater autonomy to complete the global market. The central public sector enterprising fulfilling the following criteria, having the Schedule A and Miniratna, having at least 3 excellent or very good memorandum of understanding, having a composite score of 60 or above based on performance during the last 3 years, and net profit to net worth, manpower cost to cost of production of service, gross margin, capital employed, gross profit and turnover, everything should be better. Okay, so many companies are there, like Bharat Electronics Limited and Mahanagar Telecom Limited, National Aluminium Corporation. Many are there. Mini Ratna is who? Mini Ratna is the designation applies PSC that have made profit continuously for the last 3 years, 30 crore or more, or 500 crore is equal to their net worth. Should be the government approval is allowed in that. And category 2 of Mini Ratna is 300 crore and 50% of their net worth, which is lower, is government approved. Okay, so these are 3 categories. The Administrative Reform Commission ARC recommended the need to involving balance between the autonomy and control. So excessive external control will inevitably have its frustrating the management, weaken the initiative and restraint from the taking quick decisions. So today public sector undertaking has become one of the important driver of the Indian economy. So the government has taken up a number of steps to enhance the performance of PSU. First of all, it came up with the National Common Minimum Program, outlining the objective of the government, mentioning about developing full management and commercial autonomy, and clear commitment to the empowering the central and their management, and professionalization of board of director of public sector enterprises, evaluation of performance with memorandum of understanding. So meanwhile, in the public sector undertaking, the government has a right and it is duty to the exercise its right and ownership. The authority derived from the ownership naturally make the government find the needs of controlling the performance of the public sector undertaking. So there should be a viewed from the standpoint of government responsibility as trustee of public who own public enterprises. Okay, so public must have the final word and control of the industries, as the direct control by the public is difficult. So it is responsibility of the government to be accountable for the single share it's spent in it. The government which provides the money bound to be concerned with the way in which it is spent, and PSU are tool for the implementation of the government socio-economic policies, and its proper coordination, supervision and control, it's in a different level should be required. Okay, now accountability respect gives rise to the basic questions also, the accountability and how it can be ensured. So that is important. And accountability the undertaking may be ensured, so ministerial direction, parliamentary control, audit control, judicial control, so everything according to the accountability and the control. Public sector undertakings draw their powers from the Parliamentary Act, and the parliament enjoy the control over there. Okay, and Indian labor laws are there, and we can talk about Parliament and state legislature considered specialized committee. This is Committee on Public Sector Undertakings, and Comptroller and Auditor General and Public Sector Undertaking, and examine the efficiency of the public sector undertakings and see whether the PSU are being managed in accordance with the business principle or not. Okay, and it involves a thorough examination including the evaluation of policy, program, financial working of the undertaking. The committee presents the report Parliament and the legislature with their objective and recommendation, and the Indian Audit and Account Department will be go for auditing, or that comprehensive audit appraisal will be there. So this is all about that. Now what is the liberalization and that policies? The socialist model of the development collapsed in 1990. The new economic policy. So see, socialist was the collapse. Now new economic policy came. So this given the LPG reforms in the company, in the or government company, government as a company. So this brought about fundamental change in the approach for the public sector responsibilities. The role of the state is rolled back. In fact, there was a paradigm shift in the whole approach. New public management, public choice theory, public private partnership. So this was the new phenomena in the government. Under the new economic policy introduced the massive restructuring of the organization, and the modern management advocating the greater autonomy, and the public enterprises were to raise the resources, wider participation, and industrial under the government monopoly. So center and state government allowing the greater autonomy also. So nationalization of the private sector industry was no more promoted, and this policy of Sikh Industrial Company Act 1985 was amended in 1991 to implement the same. As the Sikh unit have been referred to before to provide safety to their Sikh unit and employees, the government created the National Renewable Fund under the administrative control of Ministry of Finance. So before and Sikh industry was the created board was created there, and the operational autonomy has been granted to the union government to 9 leading PSUs also. Okay, so they was given the Maharatna, Mini Ratna, and PSU to reduce the red tapeism process of going through the expenditure of finance committee and project investment board, and will be free to raise resources as well as internationally and enter into the financial and technical joint ventures. Okay, so there was the PSU continue to be audited by the CAG, parliamentary security scrutiny, and appointment of eminent part-time director to their board to reduce the domination of government nominee. So LPG into the economy has definitely helped the efficiency and growth, and private support under the guidance and facilitation state is more needed. So privatization of public enterprises will lead to total domination of market. So there is still a need of the reduced bureaucratic delays, and upgrading the techniques of management technology, and also more effective accountable retention and pay policy. So PSU are still very important and play a very important role in neutral impartial implementation of planned economy as well as the socio-economic development, justice, and regulating the economic efficiency. So this was all about